big hello and welcome to RJ Sanderson TV. We're back here in September. There's plenty of news to cover off and the best in the business is right next to me. Roy, welcome. Another big show today.
Thanks, Dave. Yes, we've got a lot happening today. We're talking economics like we normally do. There's the consumer and business confidence graphs. We're talking crypto. We're going to talk share market and we're going to talk property, and we've got a great guest speaker with Tony Sarai.
I don't think there's any angles that we've missed today, Roy. Jam-packed, so make sure you stick around for all of those segments. Let's get into our news headlines because yesterday, Roy, the GDP growth number was released by the ABS and it was a positive number. As we look at this graph, this is the quarter-on-quarter graph. You can see that there was 0.9% growth quarterly from the final quarter of the 2022 financial year. And then if we have a look at that annual growth rate, we saw growth there as well year on year. So 3.6% is the annual growth rate, which is pretty good, and we've avoided recession.
Yes, we've avoided recession, and it's probably about where we want to be. We don't want to actually grow too fast because we, at the moment, have a labour shortage. So this is probably a right number for us right at the moment, I feel.
Speaking of the right number, there's a lot of question marks around what the right number is for interest rates, and the RBA has once again raised interest rates since we were last on the show, another 50 basis points, and now suddenly we see the interest rate, Roy, well above the 2%.
Yeah, this is worrying because at some point in the very near future, if we keep having increases, we're going to see some mortgage stress. So this is a little bit of a concern. 2.35%. The question then becomes, as I mentioned, where is this going to stop? Where are we going to land, or where are interest rates in Australia going to peak? So let's have a look at around the world where interest rates are, perhaps for a little bit of a guide, and we'll start with the US because interest rates there, Roy, at about the 3% mark, which I think is going to be potentially where Australia may end up. So I think we may have that US graph there that we can see at the 2.5% mark. So still above where Australia is. And then the other graph that we've got is the New Zealand interest rate. Now, we spoke on this show last year about New Zealand and some of the budgetary policy they're undertaking to actually bring house prices down. So we can see that their interest rates started to increase earlier than in Australia, and they find themselves still increasing and on the way up at 3%. Roy, where do you think interest rates in Australia are going to land? Well, I'm fearful that the Reserve Bank might be just copying the rest of the world. And the reason that we have interest rates going up is we're trying to combat inflation. That's the keep inflation under control. But this is worldwide inflation. This is why most countries are increasing interest rates. So I'm sort of hoping that they will see a little bit of common sense and say increasing interest rates is not necessarily going to have the effect it might have had 25 years ago on inflation, because it's a worldwide issue at the moment. So I am hoping that interest rates will start to peak out, maybe another 0.25 and then level out. And maybe the Reserve Bank should come out and give us some certainty and say, and they did that once before and got it wrong because I said no changes till 2024, but let's ask for some certainty and say let's keep them one more increase and then state we're not having another increase for 12 months so business and consumers have certainty.
I think that's one of the things that shows up in these next numbers, consumer confidence and business confidence. It's recognition that when things are uncertain is when people are low on confidence. So as you say, if the Reserve Bank could actually give some certainty as to when interest rates were going to stop rising, the market can then factor that in and people can then make the adjustments required. So this is the consumer confidence number for August, Roy. We don't have the September number yet. We are a little bit earlier than normal just with the nuances of the second Thursday of each month. I expect that this number is going to increase. So it's gone down 9 months in a row. And we saw that the business confidence number in August, as we have a look at that one, has also gone up. What we can see though is that recently retail sales growth has increased in the last month. So I expect that consumer confidence number, when it is released within the next week, will actually go up.
Yes, I agree with you. And
It's quite extraordinary that we're sitting here and the consumer confidence has dropped on month after month after month since COVID. So we've become less confident after COVID. That's a bit of a surprise in my mind. I think it will turn.
It is interesting, and I think that the reason that, and they sort of say that in the notes around consumer confidence, the reason that it kept dropping post-COVID was because of the level of uncertainty. Things like inflation, interest rates, war in Ukraine, and the outlook for people financially over the next 5 years, etc., was just that things were bleak. But now I feel like there is some certainty. People are going out and spending in the middle of winter. We saw retail sales growth grow in July. Perhaps that's an indicator that people are starting to be less fearful of the global issues that we're experiencing, and they're starting to feel more comfortable about the situation. So interesting, watch that space. Next time on RJ Sanderson TV, we'll have those fresh numbers and our prediction, consumer confidence to increase. CoreLogic property prices tell a very interesting story, Roy, and the effect of interest rate rises perhaps really showing up here. You can see that the month-on-month trend in property prices, or there is a massive decrease in prices in Sydney and Melbourne, which now nets out to a year-on-year decline in property prices.
Yeah, the two biggest markets in Australia, Sydney and Melbourne, having decreasing on a year-on-year percentage. That's amazing. We certainly expected them to level out, and have said a while back they need to level out. But have a look at some of the other places, like year-on-year, Brisbane 17, Adelaide 21 up. They're quite big increases despite some very recent decreases. So property prices, in my mind, Sydney and Melbourne have levelled out. I know they're 2 to 3% down, but that's very close to a levelling out, and I sort of think we'll hang around that mark for some months. I don't expect to see 10% decreases year on year like some commentators are predicting. I think this is about where we're going to sit for a little while, around the between 2 and 3% decline for maybe the next 6 to 12 months.
And we're going to contrast that against the share market very shortly, Roy, because you've got some interesting graphs to show on that one. Before we get to that, though, a tax tip. We love a tax tip. What have you got for us this morning, Roy?
Yes, so tax tip relates specifically to cryptocurrency. It's amazing that 28.8% of the Australian population, that's adult population, own crypto of some sort.
It's amazing. It's
extraordinary.
Amazing.
So, especially when crypto doesn't pay a dividend. So we're all banking on capital growth over time. Now, tax tip is that for that 28.8%, you do need to disclose any capital gain or loss on your tax return. And the way you get that is you go to the website cryptotaxcalculator.io and you download their software. You pay them direct. It's not through RJS or any accounting firm. And they have an ATO compliant package that will allow you to calculate your gain and loss and supply it to the accounting firm that you use. And if you want to get some advice on crypto and know who the absolute specialists are in crypto world, go to cryptocurrencytax.com.au. So that's the tax tip of the month.
What about crypto more generally? What are some of the trends that you've noticed in terms of the valuations there?
Well, I've got some slides specifically on crypto. So just have a look at this one, which is the total valuation of all cryptocurrencies. That's not just Bitcoin, that's all cryptocurrencies across the world. So some time back, they were worth 2 trillion. That's a T, trillion. They're now worth just over 1 trillion. So across the world, they've gone from nearly 2.25 down to about 1 trillion. It's half, more than half. So we're not just talking about the demise of Bitcoin, but Bitcoin, all cryptocurrencies have declined over that period of time.
And Bitcoin specifically, this is the 12-month graph. You can see that it's sort of similar in trend to the global valuation.
Yeah, this is just 12 months. The arrow there would point downward spiralling. So over a year to date, as of the last couple of days, we're up around 28,000. And I think we'll see that it did peak at somewhere over 80,000. And this is a good comparison because it's 5 years. So if you're looking for a long-term investment in crypto, over the last 5 years, it was sitting at a very low price between 10 and 20,000 for some time. It peaked up around the 83 on memory, which you can see there, 87, sorry. which is flagged, and it's been in decline since with some bips going up and downs. But the long term is pretty flat and the short term is downward. So I'd certainly be treading carefully if you're into the cryptocurrency trading.
The question then becomes, in a diversified portfolio, how does it compare against other assets? And obviously we've looked at property prices, we've looked at the crypto prices. How does it compare to the share market?
And yes, so we put some slides up here on the share markets because people need to decide which they invest in. Now, I just want you to look at this. This is a 1 year graph. Now, factually, this is a downward trend over the last 12 months. And we know that up to June 30, we certainly had some downward spiralling. So 12-month graph, Australian share market on a downward trail. So just remember that as we go to the second graph. Now, this is 5 years. Now, despite the last 12 months, our last 5 years, we've got an upward trend. Remember that. Now, let's go to the next graph, which shows us over a 20-year period. So if you focus on any 1 year that is down and say, I'm selling out of my share market portfolio, you're probably doing yourself a disservice because the aim is to stay in for at least 5 years or longer, and you will have the upside growth. You only lose money in the share market if you sell. So this is a message, and this graph here over 20 years is very different to the graph we just saw in cryptocurrency. So and the differences are that share market, all the companies on the share market, they make something, they build something, and they pay a dividend. That doesn't happen in cryptocurrency world because you are buying something that you only can win if it has capital gain over time. So huge difference. In the share market, you can actually analyse how much turnover the business had, how much profit they had, what's their earnings per share, what dividend are they paying. So selecting the right shares in the stock market is so much easier if you're using a professional that looks up at these things compared to trying to pick the right investment in cryptocurrency or the right coin within crypto world.
Yeah, interesting thought there, particularly that 20-year graph. And I think we've spoken on R J Sanderson before in the past that, if you looked at the 20-year graph on property, it's probably pretty similar as well. So there's a lesson there, or there's an interesting message there, and take of that what you will. Tax quiz time, Roy. We love this one because this is where we put you under the microscope to see what the answers are to some of these interesting questions that have come through. Let's have a look at the first one. I work on a computer all day and need glasses. I only use them while on computer and working. Can I claim the cost of reading glasses for my computer?
You would think logically the answer is yes because you need them for work and only use them on the computer, but the ATO have issued a ruling that says glasses are classed as medical and they are not tax deductible because no medical costs are.
There you go. Next question is, can I claim an Apple Watch as I need to constantly be checking time for next Zoom meeting? I also check my emails on the watch. Can I claim the cost of the Apple Watch? Yeah,
very topical in tax world. We actually believe that because you check your emails on your watch, you should be able to claim it, but the tax office has issued a ruling that says they are not tax deductible. So watches, for you and I that have to turn up to work on time, attend meetings on time, a watch of any sort is not tax deductible.
There you go. Next question. These are quick fire. Can a fashion model claim the cost of cosmetic surgery?
The answer is no to that because cosmetic surgery is medical. Can't claim cosmetic surgery for any industry.
Interesting. Can I claim the cost of a guard dog if I work from home?
Love the question throughout this week. The answer is no because you live and it's not an adjusted place of work where the dog lives. You also live there, so you can't claim that.
Can I claim the cost of an air filter machine for the home office? Now, that's topical with everything that's going on in the commercial construction.
So is air filter classed as medical is the question we ask. The tax office have said no. They will allow an air filter in the office, home office or the normal office. So that's a yes. We can claim that.
There you go. And then the final question, can I claim the cost of face masks which I wear at home?
If you're working at home alone, and you go to the shopping centre, the answer is no. But if you actually wear them at work, so if you are wearing the face mask at work because you need to wear them at work, then face masks are tax deductible because you're wearing them at work.
Interesting. So plenty to learn there. And these are real questions that have come in.
I just picked a few that had come up throughout the last couple of weeks from listeners or clients, and I thought I'd share them with you.
The guard dog one really gets me. I like that one. I also love this segment. It's called Roy's Rage. It's been a staple of this show for 3 years now. And Roy, you always come armed with the big hitting stuff. What have you got for us this week?
Well, we talked throughout the week in our emails to our clients that there is this new grant out. Now, you'll love this. This is a grant where you can get $2,000 to get business advice to help your business. Great idea, state government driven. They said, we'll put $5 million up there. That's 2,500 grants. You've got to employ staff. You've got to have had an ABN for some time. And it opened on the 1st of September. Guess what? It's fully subscribed in 6 days, so it's now closed. And my rage is $5 million. Please, state government. You've got to put in more money than that. This is something that businesses are crying out for. Get some advice, get some special advice to help your business. And I would call on the state government, they should double this or triple this, because this is what's needed. We need to grow businesses. So the fact that it was fully subscribed, they had 2,500 grants at 2,000 each within 6 days, tells me they need to expand it.
Interesting stuff. Yeah, amazing. Closed in 6 days. So very quick there in terms of the uptake on that one, and perhaps a call there for the state government to reopen that and maybe up the total budget on that one. Right. Time for our guest. He's a man very familiar to this show. We love chatting to him. Tony Sarai from RJS Wealth Management. Welcome to R J Sanderson TV.
Thanks for having me, David, and thank you, Roy.
Tony, maybe just broadly to start us off, we talked earlier in the show about consumer confidence and business confidence. What's your overview of where we're at in a market perspective, at the moment, given previous global uncertainty, interest rates, inflation, etc.?
There's a lot happening at the moment, and I would say, look, if we're talking from a stock perspective, from all the data that we have, everything is fairly valued. We have seen a decline in the markets. We saw that yesterday as well, a sell-off. However, we're going to have these sell-offs as a result of the current market conditions that we face and the spot fires that we have around the world as well.
Tony, I'm curious that we know that there's a labour shortage, we know there's inflation, we know there's increasing interest rates. What effect does that have on the larger businesses that are listed on the stock exchange? And what effect does it have, and what effect will it have on pricing?
We'll start with the interest rates. So interest rates going up. We saw interest rates go up this week as well, and there's a lag time, and you may have covered this in previous sessions as well, but the lag time, even for businesses, so if I'm borrowing, that lag time, rates went up yesterday, early this week, but you're not going to see that for another 3 months. So from businesses' perspective, they're still working on a 3-month lag in relation to interest rates and from their expense. And as a result of that, we are going to have, I'll say, volatility as a result of that. However, volatility then opens up to perfect buying opportunities as well. In relation to inflation, we know that the RBA is trying to curb inflation by raising rates, and that is the mechanism that they're using. That will continue for some time yet, although we do think at the moment that at 2.35% is where we're at, that they'll slow down after they get to about 2.5% plus.
Tony, because RJS Wealth Management make recommendations to clients on what shares to buy, do your team of people who do the analysis of companies, do they drill down to who are highly geared with lots of loans that
Absolutely.
an interest rate increase is going to have a big effect on?
Absolutely. And so our team look at the underlying assets, and so we look at companies, and so we're like, okay, look, in the current market cycle that we are in, which companies are going to be better suited for the next 6 months, 12 months, 2 years in comparison to if the role was reversed. And so what we see there is that there has been a tilt away, and we've seen this over the last 18 months where there was a transition from growth-oriented companies from, I'll say, your tech companies to companies that were more value-related. And now we're starting to see that come back the other away. And we do think that over the period of the next 3 to 6 months, that there will be that tilt that changes as well. And we as a investment committee do make decisions on the underlying assets in relation to, we think it's now time to change and move away from these value type assets towards a growth type asset as well.
Tony, given everything you've just said and given, the Ukraine situation, everything else that you've talked about, is there some predictions for future dividends in general across the board for the Australian stock market? Are we thinking that dividends will increase, decline or be steady over the next 12 months or so?
Look, I would say they're going to be steady. I don't think they would increase substantially to begin with. I think they'll be steady. I think they'll go lockstep as they have over the last 6 to 12 months. The whole Ukraine situation, Russia, the zero COVID policy in China, all of that has had an impact in relation to I'll say almost everything. You're seeing, food supplies, your veggies are still expensive, although the cost of lettuce has certainly come down. But all of this does have an impact. And so that is something that we do see sticking around for a little bit. However, we do actually think that there is also good value in the market as well. And so there are companies out there at the moment that are doing fantastically well.
Well, Tony, I have to put you on the spot. There are people hanging on the edge of their seats wanting me to ask this question. We know that cryptocurrency is one investment, but we don't recommend it. But there must be something on the stock market that is your hot pick or something that you would be a strong recommendation. Give us something good. Listeners need it.
Oh, look, I'm going to sit on the fence on this one, and I'm going to say, look, come in and see us, and that's going to be my secret sauce, right? The recipe. Look, I do think there is certainly growth in the market coming in the not too distant future. I also believe that this trough that we're in relation to the downturn that we've had, these downturns only happen for a short period of time, and the recovery on most occasions is actually very, very strong. So I think we're not too far away from that over the course of the, let's say, next 6 months or thereabouts. So I'm going to say watch this space, but come in and see us and we'll give you stock tips when you come in.
I think that was a very general tip that was buried in there, Tony. I'm hearing that it's sort of favourable economic conditions and now might be the time to buy, but the message is clear. rjsanderson.com.au, get in touch with Tony and the team, and there's opportunities out there. Tony, thanks so much for jumping on with us today.
Thank you, David. Thank you, Roy. Chat soon.
Tony Sarai, RJS Wealth Management. Always good fun to chat with him. And Roy, I think he did the right thing there. Like, we've got to be careful. We don't want to give away. We don't want to be seen to be giving away financial advice.
He gave us a piece of gold that you might not have picked up on, Dave. Though he said that normally when there's a decline, the next year there's an increase. Now I've seen a graph which we didn't present today. I might dig it out for next show. A graph on the whole history of the Australian stock market. And without fail, every time we've had a decline, like we've just had, the following year is an incline. And within 2 years, almost invariably, it's a great incline. So people say, when's a good time to invest? And I always say now. It's always now. But generally, now is the right time because we've just had a decline for 12 months. The expectation is we're going to have an incline for the next 12 months.
There you go. What a show it's been, Roy. We've covered off on so much economic conditions. As I said, I feel like the tide's slightly turning, even though interest rates are still continuing to go up. As I said, my prediction is that the next time we sit here, we'll be talking about the increase in consumer confidence.
I think we will be too. Hope it's good.
Roy, it's been fantastic to be with you today. And before we go, there's one more fantastic thing that we need to mention because RJS is going to be on the big screen, on the TV.
Yep, we're got a premiere coming up on 7/2 called Modern Business Australia. So look out for that. It premieres on the 18th of September at 1:15 on 7/2. And we're on for 8 segments. And there's just a couple of pictures there of us actually doing the filming with Bianca Chatfield, guru from Fox Sports, and she's ex-basketballer, won a gold medal. She's absolutely fantastic, and she interviews us on a number of topics. And the show runs, there's 8 episodes. So put that in the diary, set your recorder, and that's a lot of fun.
Wow, that'll be awesome. Bianca Chatfield, a very good friend of SEN and, as you say, champion in her own right now, off the court and obviously on the court. Look forward to that one. Roy, thanks so much for joining us. It's been great fun as always.
Thanks, Dave. Look forward to next month. Have a great month.
Next time on RJ Sanderson TV, all of this and more. We look forward to your company then.